Here we are again. Welcome back to Sudden Wealth. And today I've just reiterated exactly what I've been talking about. Here we are again. Oh, only a few stocks are behind this rally. We are down, 0.7%. This is it. The crash is coming. We are all finished. 1929 by September. I mean, it's the same story over and over and over again. We just went up between the middle of the 44 handle on the S&P. I mean, you need some pause, some pullbacks. You had a very eventful week last week. You have a pretty quiet week this one. It's normal that you don't go up every single day. But this is my point. As long as every time the stock market goes down 0.5%, 0.7%, and immediately the articles multiply, and these indicators, and the collapse is here, and this is the start, short the market, go all in, sell everything. I mean, I'm just quoting news, right? Please don't take this as financial advice. But when you start seeing this kind of attitude, that means most likely we still have some more room to grow, because these are the typical signs that you see when you are in a kind of a recovery year after a bear market. It's like people are very suspicious. People hate this rally, like they have an emotional connection to the market, like they really want it to go down. You can feel it, right? They come up with these lines crossed back in 1910, and so in 2023 this is going to repeat. Oh, the moon never had this glow. Last time was 200 years ago when the stocks went down 20%. I mean, it's one after the other. And this is not the typical environment for a huge long-term top. You need people to be completely all in. Like in 2000, people just putting everything they had on the last .com stock that came out, and basically nothing could go wrong, and the economy was going to double in 3 years. That's the kind of environment that you need, not what we are seeing right now. As I mentioned, I do believe if rates manage to hold without major issues, we should see a continuation. But there is no market in the world that goes up non-stop, or a market in the world that goes down non-stop. You always have breaks. You always have consolidation stages. You always have some sideways movement. But so please don't go follow this crazy nonsense doomsday scenario that you see on YouTube. Now, having said that, there's going to be a time where there's going to be a reckoning for this monetary system. The way that we leverage the future, that we indebt the future to survive the present, leaves consequences. And one of the problems of democracy is that politicians cannot resist printing money to make recessions, at least on the surface, go away. So we will one day pay for a lot of the mistakes that were made over the last 14, 15 years. The thing is, a lot of these things can last much longer than you can think. And you need to wait and see clear signs of distraction. I'm talking about things like, you see the 10-year yield? You'd need that thing to go up like a percentage point per day. And with the Fed completely desperate, printing money, and the whole thing doesn't stop going up. That's what you need. Not commercial real estate about to collapse and everyone is looking at commercial real estate. That's not how it works. It will come from the place you least expect. And so please, you need to understand, right? I also throw some clickbait, because unfortunately that's what YouTube algo wants. Like if I come here and say, look, I think things, at least for the next 6 months, should be quite stable, I get nobody cares, right? If I come here with doomsday confirm next week, yeah, unfortunately that will attract a lot of attention. But try to read between the lines. And always be mindful of something. The real crash, the real pin of a huge bubble comes from where you don't expect it. If everyone's talking about commercial real estate, if everybody's talking about, I don't know, the war, the potential invasion of Taiwan, things like that, that's not going to be it. Okay? So, see you in the next one. And as I mentioned, chill.